Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 12th, 2025, and we're diving into Redwire's first quarter earnings report for 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Redwire, a leader in space infrastructure, has just released their Q1 2025 financial results, and there's a lot to unpack, from their revenue figures to strategic initiatives like the acquisition of Edge Autonomy.
Revenue and profitability overview. Let's start with the financials. Redwire reported revenues of $61.4 million for Q1 2025, which is a significant decrease from last year. Can you elaborate on this, John?
Certainly. The revenue decreased by 30.1% compared to Q1 2024, primarily due to delays in U.S. government contracts and increased production costs. However, the net loss improved to $2.9 million from $8.1 million last year, showing some positive movement in profitability despite the revenue drop.
And what about their liquidity position?
Redwire reported a record total liquidity of $89.2 million, which includes $54.2 million in cash and cash equivalents. This strong liquidity position is crucial as they navigate through these challenging times.
Strategic initiatives and market expansion. Redwire has been active on the strategic front. Can you tell us about their recent initiatives?
Absolutely. Redwire announced the acquisition of Edge Autonomy, which is expected to enhance their capabilities in the space sector. They've also secured significant contracts, including one with Thales Alenia Space for the Lunar IHAB module and another with NASA for pharmaceutical investigations on the ISS. Additionally, they're expanding in Europe with a new office in Poland to capitalize on increasing defense and space budgets.
How do these moves position Redwire for the future?
These initiatives are strategic steps to diversify their market presence and strengthen their portfolio, especially in the European market, which is seeing increased investment in space and defense.
EPS forecast and analyst expectations. Let's discuss the earnings per share. Analysts were forecasting an EPS of 20 cents, but Redwire reported an EPS of 9 cents. What does this tell us?
This is a positive surprise. Redwire managed to beat the EPS forecast significantly, which indicates better than expected cost management and operational efficiencies. This beat is a good sign for investors, showing that the company is on a path to improving its financial health.
Operational challenges and future outlook. Despite some positive signs, Redwire faces operational challenges. Can you elaborate on these?
Yes, the company experienced net unfavorable EAC changes of $3.1 million due to unplanned labor and increased production costs. Their free cash flow was negative at $49.1 million, largely due to one-time payments related to litigation and M&A activities. However, their book-to-bill ratio improved to 0.92, indicating potential future revenue growth.
What is their outlook for the rest of 2025?
Redwire is forecasting full-year revenues between $535 million and $605 million, with an adjusted EBITDA of $70 million to $105 million. They are optimistic about achieving positive free cash flow, especially with the completion of the Edge Autonomy acquisition.
Key takeaways. In summary, Redwire's Q1 2025 results show a mixed bag of challenges and opportunities. While revenue has decreased, the company has managed to improve its net loss and beat EPS expectations. Their strategic initiatives and strong liquidity position them well for future growth. Thank you, John, for your insights.
Thank you for having me. Redwire's focus on strategic acquisitions and market expansion is promising, and it will be interesting to see how they capitalize on these opportunities moving forward.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on Redwire's performance in the comments below.